let's go ahead and transition to the precious metals. You mentioned a potential blow off top. That's concerning, Chris.
Yeah, well, I mean, let's look at the zoom back on gold a little bit. So gold has been doing exactly what you'd expect it to do. It has been moving higher as fear and chaos continues to pick up speed. Really, right around here is where we started to see precious metals explode. This was kind of July last year. It's when gold really started to become mainstream. We started to see everyone pile in, and huge numbers were touted for where it's going. We ended up seeing this huge move. So I think this phase right here was a blow off move. I mean, we exited our gold above 5,000. We closed out our physical gold position, moved aside. We had a short-term trades in there as well. We played a move right in here. We also played another move right in here. On top of our physical gold positions, we just wanted to take advantage of these emotional mass psychology euphoric phases. So this euphoric phase typically gets wiped out very quickly. If we go and we look at this chart that I've shared with you before, this is the euphoric phase right at the top here, where things just kind of go explosive. Everybody thinks they're going to be rich. Everybody's a genius. Gold's the best play, and usually that's when you see a huge correction. It stutters for a while and then it falls out of favor. And I've seen this cycle rinse and repeat many, many times in all different asset classes over the last 26 years that I've been trading. And so we've got this blow off phase. Now, if we were to zoom in on the chart of gold a little bit here and use Fibonacci extensions based on this most recent move, I find this is the most powerful tool. It's very accurate in telling you where price is most likely to go. So based on this chart of gold saying, okay, it's sold off down to here, it's rebounded back to here. Based on that drop and that bounce, it is telling us that gold should go to about 4,000 and then about 3,500, which, if you look, also happens to be the point where the switch flipped, where the mass psychology and FOMO kicked in and everyone had to get involved. And so the market is very good at anybody who chased price up in the last, final hours are going to pay the premium and more or less not only give back their gains, but they're actually going to go into a deep loss. So, I mean, where gold is right now, I think we could see about a 25% correction from where it is. And I see this as a huge opportunity. I think if gold pulls back here, that also means the equities market is crashing. I think it's going to be an unbelievable opportunity to reload in gold from where we exited with our strategy, which was to get out right up into this area over here. Being nothing like being able to buy it back at a huge discount and then ride the next wave. Because I do think eventually, in several years from now, potentially, we're going to see gold at 8,000, 12,000 and beyond. I'm a gold bug. I think it's very good, but I also can get rid of it when I think things are a little overdone and it's going to need some type of correction. And so that's kind of my view on gold. Now, silver is very similar, but before we jump over to the silver chart, I just want to kind of show my downside potential is about 3,500 for gold. That may take 3 months. That could take 12 months. Who knows? It might take a long time to unwind. If the stock market rolls over and sells off for 6, 8, 12 months, we could see gold slowly drift down and sell off. And I don't want to waste that time. I'd rather benefit from inverse ETFs. If the market's falling, I want to benefit from falling pricing. I don't want to just give back 40, 50% of my gains in gold and then wait years. I want to rebuy it at a cheaper price. So that's my bearish outtake. The bullish outcome here is we do have this big move up. It is putting in this giant bull flag. And whether it continues to flag out here and potentially come down even further, it's going to be a great opportunity at some point when it starts to break out to get long again. And then I think we're going to see that go and have a huge move. Also, we could see gold start to move up and start to build a bull flag and a launch pad and really start to break out and have another huge run and maybe go for one final blow off move. And maybe we see $7,000 or $8,000 gold. If this is the case, our strategy will say, okay, it's time to get back in. This wants to go for another run. Let's hop on and ride this bull even more. And so I don't really care what it does. I just don't want to be stuck holding something for 1, 2, or 3 years with no return. And to watch, 30, 40% of my gains or potential upside get wiped out when there's no need to, because we can follow price. So that's my take for gold is we just have to wait and see. The easy money has been made. Now we're waiting for the next setup. And, when we got into gold, I only trade precious metals with these massive kind of super cycles. And so the last time we got into gold was right over here. 2019 is when it broke out of this base. This is kind of what the dollar is doing. It's built this, this flat level, this rounding base. That's what precious metals did. And then we also accumulated more on the COVID crash right here. And then we sold like right up here. And so I'm waiting for this next reset. And I don't know if it's going to take 3 months or if it's going to take 3 years or 10 years like last time or even longer. So that's kind of what I'm looking for in my focus on trading precious metals. I don't want to ride this roller coaster when there is absolutely no need to if you understand how to read charts and sentiment and manage a portfolio.
Yeah. Okay, so is this pattern, so some people have been mentioning the 2008 scenario where gold rallied, sold off with the markets, and then rallied significantly from there. And so curious if we could look at that period. Do you see any patterns with that?
So we could see something like this. So this is the 2008 peak right over here in gold. We did see gold have a correction. It pulled back 34% from the high. And then from there, it was fairly short-lived. I think it was only like 8 or 9 months or so. And then suddenly it took off and it had that second big move. That's what I kind of feel like is going to happen here. I think we're going to see gold and things pull back. And then we're going to see it like ramp up and go absolutely ballistic for many years. I think it's going to get stretched out even further. And I think we'll be up in the teens, right? Like, 13, 14,000 for gold, something like that. When you look forward 5-10 years from now, it'll be a great value. That's ideally in a way, that's what I'd like, because then we can get some very big returns quickly. My only concern is like looking at it from, if we have $10,000 and $15,000 gold, I mean, man, it really worries me what the world will be like, right? It could be real ugly. There could be a lot of war. There could be a lot of robbery and theft and all kinds of stuff. This is high gold prices we don't really want, because it just means we're living in a more uncertain, a very higher risk kind of environment. So in a perfect world, gold goes dormant and does this for the next 14 years, and the world stabilizes and the market has a little reset, and then we start a new bull market and all of that. But if gold keeps screaming and silver takes off to 200 and change plus, it might not be the most exciting life that we're living, right? Like I just renewed my gun license. I haven't used it in over 10 years. And I'm like, I'm renewing my gun license and I'm just getting prepared. I think when push comes to shove, if all hell breaks loose, you need precious metals, physical, because internet could go down, or who knows, or AI is controlling everything. Once AI takes over and can hack every system, we're really screwed. And I think it comes down to like physical metals. Crypto will be worthless if like the internet's hacked by AI that's like done it all, right? So you need physical metals, you need food and water, and you need bullets. Like that's how you control the world.
Yeah, for sure. So I'm curious if you, in your view, also how M2 money supply plays into this. So obviously, massive debt deficits. This is all going to have to be funded. Actually, let's look at, before we go to silver, can we look at bonds, the behavior of bonds? Like, it seems like bonds aren't necessarily the safe haven anymore. And central banks have been buying gold. I think China sold a lot of treasuries. And just curious in your thoughts here, because someone's going to have to fund this amount of debt and deficits, and it seems like there's going to be a lot more money printing.
Yeah, I'm not a big fan of the bond market. I mean, if all hell breaks loose, the markets tend to do what most people don't. The majority of people aren't expecting, and I don't want this to happen at all. But there is potential. Like we saw a 40-year climb in bond pricing as yields fell to like near zero. Now we've got this giant move to the downside. It is creating what is actually a very, very bearish chart pattern. If it breaks to the downside, we are going to see a huge unwinding event. in terms of bonds. And we not only will bond prices fall because we're probably going to see like inflation, we're going to see all kinds of chaos. We're going to see interest rates probably spike up fairly dramatically. Bond prices are going to fall, but then there's probably going to start to be defaults. It obviously depends on the type of bonds, but you get into corporate bonds and high yield, high risk junk bonds. There's going to be a lot of things imploding. We saw this in 2008. I mean, companies were going bankrupt left, right, and center. Defaults everywhere. It doesn't matter if it was school loans and cars and homes and like business loans, equipment loans. Like everything was just default. Everybody's just walking away, saying, "You know what? Screw it. I'm just starting fresh. I'll go bankrupt. I'm not, paying all this stuff." They buy a house for $500K, and in like 6 months, it's worth like $300K, and they're paying mortgage on more. So this is like the worst case scenario. I mean, I don't want any of this to happen, but the bond market is scary. I mean, we need to, this is why I do what I do. This is what I talk about in my book, Asset Revesting. My whole focus is I have gone through bankruptcy. I've lost everything many years ago, my family. I know what it does to your psyche. I know how it can almost kill you from your health. It is extremely stressful. We are in a point right now where we have the largest group of people near retirement or retired. The last thing they can afford is to watch the price of their bonds get cut in half again, or to watch them lose their life savings when everything has gone up like 50 or 100% in cost or more. Inflation is through the roof. I don't care what the government numbers say. Stuff is not cheap. It is way more expensive than it used to be. And if people lose half their life savings, I mean, it's just going to devastate the retirement community. And that's my whole focus, is how can I protect everyone from this? If it doesn't happen, great. We'll just continue to make money. If it does happen, you'll probably end up being one of the wealthiest people around that because you wouldn't have lost your shirt. In fact, we're going to benefit from a huge collapse and a breakdown. So the bond market is a very scary thing. There's a lot unfolding, and nobody knows where it's going. The key is to have a very defensive, pessimistic mind, saying this is what could happen. This is what is, I believe it's very likely to happen. And so you got to have a game plan. And this bond market you bring up here, I mean, man, this is going to be pretty devastating if the bottom falls out. I mean, look at the TLT ETF. Let's just move into the TLT ETF. And I'll just zoom in a little bit. Look at the volume on the chart, right? Like everybody has been bottom picking. You look at the volume, everybody since this big washout low here is loading up on bonds. And they think like this is it. It's a major support level from way back in early 2000s. The yields are about to top out, and we're going to see bonds go for another run and become a safe haven play. What if that doesn't happen? If this bottom falls out, holy crap, man, there is going to be a huge fallout in terms of people's financial wealth. Financial institutions are going to get hit very hard who play the price of bonds. It's going to be difficult. So you bring up a really good point. I mean, this is not what I would want to see, but man, you better have a game plan ready, because we have worked so hard to build the life you have and get the wealth you have. It can be wiped out in 3 to 6 months. And then it goes so fast, you make your head spin, and there's nothing you can do about it. Once it's done, you're lost. You're screwed, right? And so that's what I believe in. We have all the tools, even AI, to help us identify when something is trending up or down. There's no reason to hold assets falling in price anymore. That's just ridiculous.